Hello guys, and glad to have you on board again. Today we are going to make a quick update at the mid session of this week. Even though things are moving pretty much according to the weekly plan, still kind of wanted to make a quick update out there. So regarding stock markets and indices in general, the S&P 500 gave us early signals throughout the week with a double breakout range signal, which means the algorithm is detecting that we're breaking cycles pretty violently, but with reasonable probabilities to build range boundaries. And when we do two of them in a row, the second one is going to be highlighted by the indicator as a context, a tradable context, telling you something that we have a range alert and that you should be able to visibly put the range boundary. That's exactly what we should see, okay? And oh, no shit, Sherlock, we can definitely figure out this bearish range. And that's exactly what we were talking about into the weekly update, saying that we would eventually get this, or something like that, building kind of a 45-degree angle bearish trend channel, just like we were stupidly rising before. So I see everyone going bullish right now because we've made a dip. Well, okay, let me tell you something, that a market doesn't necessarily go bullish because we've built a mature range, which is the case, okay? We've got first, second, third, fourth range boundary, which means until we've got a breakout of this range, we're still in this range. So I see everyone switching to bullish mood for absolutely irrational reasons. And we're going to try going against these behaviors because I personally still stand for what I say. The market is bearish to me, and I see the retail traders getting in to buy it. So that's exactly what I want. And that's exactly what's leading me to believe that the market will keep on pushing to the downside. We've had retail traders exposition to the upside. They're still kind of hesitating in the nearby area. So it's all about the smart money sentiment. And my personal state for this is that we're going to oscillate across the 50 to 60 area, still with a slightly positive bias because it's not the end of the world, but we finally managed to get these oscillators to cross over. So we're going to see, but if today is just the slightest of a bearish day, I'm going to be damn sure that the retail traders are going to get to buy more, which is going to fuel us right back to the downside portion of this bearish trend channel. And we're going to break it and stuff like that. I still doubt it. But don't forget that we got the NFP on Friday. And yeah, it seems like everything is perfectly aligned to the upside right now. And I still contradict with these visions for the reasons we've talked about. I think we're just in the top of a range that yet is mature. Sure is, though we could break. But I think everyone is ready for the breakout. That's simply not going to show up. I'm definitely looking at short selling the market today again. Just needing some more signals to do such a thing. But I think even though we've got a mature range, exceptionally, I'm going to allow you guys to trade the fifth range boundary. Normally, you're not supposed to do such a thing, but you're going to trade this just like it was another third range boundary. So explicitly today, because I told you so, and this doesn't come without risk taking, you guys are allowed to take these trades. So in my personal opinion, the trade was yesterday, but today I think we're going to get another one. So look at market positioning in here. I would like to see the market. Remember that you can't sell into the lower 50% of a trend channel, which means you're right now into the area in which if we go slightly higher, if you get a bearish signal, take it, okay? It's more like that. Put a stop loss over the previous market top, and that's as simple as it is. If you get stopped out, end of story, we're definitely into a bullish breakout market because this is a mature range, and if we break it up, and if we break the third range boundary, that means trend follow. It's still at play. I just don't think there is such a thing. I think the market just rebounds, stimulus package, whatever. Everyone is overexcited. Technicals are bearish and see everyone bullish. That's exactly what I want. People are willing to buy, and retail traders will definitely get into buy more if the market rejects the resistance once again. Okay? So pay attention to this. Yet the moving averages are still bullish, but they are pretty much getting flatter right now. So we're going to get a flat moving average with a deteriorating value over time. This is exactly the type of market in which we go for supports. We don't necessarily break the supports, but we get to look for supportive prices rather than breaking resistances. All right, that's for stock market. Still questioning the timing. Remember what we've said on the weekly updates. The thing is that right now the market seems to be building the same kind of support, not a channel in here, okay? But we've said anytime we get to the 30 levels on the volatility on the VIX, we kind of think that no one's letting us going beyond this level. So it feels like we got a huge resistance over 30, but we still have a rising support in here, leading me to believe that this trend channel we're trading into the SPX is going to cause the VIX to oscillate between this ascending trend line support and flat horizontal 30 level area. Okay? So until we get out of this, either to the upside, which means we're going to break down the bearish trend channel, okay, oscillate and break down, or option number 2, we get to break below this trend line, which is going to cause the opposite, like bearish trend channel, and we're going to break it to the upside. So that's the option for invalidation. So if today you see VIX breaking down the trend line and the S&P 500 breaking down the trend channel, negative trend channel, and breaking the third range boundary cycle breakouts, then in that perspective, I think that we'll get more than enough information to trigger an invalidation of the bearish scenario, which means I'll take out the trades and still go back to covering the portfolio and destroying any net bearish exposition, probably with a little bit of losses, but no big deal. It's going to be totally negligible. Okay, so I'm still being cautious. It's not about time to be aggressively piling up bearish positions, but I still think this is not necessarily reliable signals to change the mood and change the plan. So we have attractive prices, and that was part of the plan to consider that we might eventually have a slow down move pace in the market with multiple retracement until the market totally exhausts itself with a final blow that is very likely going to happen when we'll eventually get to break down the trend channel. Okay, that's a topic for later. Until further notice, as long as we do trade this trend line, get to sell the fucking thing. And anytime we get to 30, just buy yourself out. Not necessarily 100% out the market, but take at least 50% when we get to the 30 level, because we're going to get deep retracement multiple times in a row until we actually figure out to break the 30 level. That's a topic for another day. Okay, so when it comes to WTI, still the same old thing. The reversal, I think, is in place, which means we can finally settle for stop losses, which means if you have opportunities of rebounces, I doubt they could occur, but if they do, take the third range boundaries on the H1 timeframe reference on the WTI. 15-minute, I think, could also trigger. So if you've got just a 15-minute 61% retracement, take it, even if you're not into the H1 signals, okay? Considering gold, I want you guys to be really cautious with this guy, okay? We're accelerating to the downside and breaking cycles, and I don't know what the fuck is sine wave doing, or framework doing out there. We should definitely have a range breakout, another square signal. So I don't know. I'm going to investigate. It's probably just one another experience in which the scenario, the signal is blocked just because of a tiny little difference into the conditions to get to be met. So in here, I think that most of the conditions to trigger these breakouts are there. I just don't see why the indicator is not doing such a thing. So like I said, considering it that way, the market is trying to accelerate to the downside. And we're looking for bullish valuation over time. Okay, consider the moving average as a perception of value over time. So value is increasing. Okay, sure thing, we've just reversed the context, but that means this is where we're going to get. Okay, and we're going to get a fourth range boundary, because you see the pattern. We go to the context, we fail to reverse it, then we go up. Okay, we fail to make new highs, and in a second stage we finally break the context. So that is the delayed third range boundary pattern. So we've got a nice third range boundary in there. We're neutral bearish until we get back there and break it up. So don't get me wrong. I'm not saying buy the gold. It's a hell of a bullish thing. No, it's consolidating, but this is a potential fourth range boundary entry. Something for experienced traders only. Remember that this is a red level context. So this is experienced guys only. So you guys know how to do these things, or you just do not do it, okay? And looking at these types of markets, we're oversold, sure thing. But the fact is, as the indicator doesn't yet detect the breakouts, lead me to believe that we possibly have one more to come. And in that perspective, are we willing to eventually buy below these trend channels expositions. Okay, so possibly for experienced guys, have a look at this teeny hidden footprint. That's the level I'll care about. Very aggressive, of course, but I'll get to buy if we get down there. I'm looking at actually silver, which feels a lot more bullish to get to enter rather than going into gold. But that's a topic for another day. I'll talk about it in the next weekend update. Sorry about that, really irritated throat. In here, we've got lots of signals in the USDJPY. I think this is an area of interest for us. Still, we've got early signals, but they're not enough in the shorter time frame. 4-hour chart just give us taking profit patterns right now. So for experienced traders only, we're still looking for bearish opportunities, but it feels like it's not yet. We can try to go higher and work out this resistance a little bit before we actually get the bearish momentum to trigger. So patience is required, but we definitely monitor the USDJPY within the next following days and weeks, because we're probably going to get the signal rather sooner than later. And then Apple, I'm still going to reinforce this guy. I still have my personal behavior. We've dipped the toe below 125 and we've settled ourselves out there. Lots of people are bullish in this thing and I don't like it because there is clearly a reversal pattern at play in here. Third range boundary broken, 1-to-1 ratio. And then we retrace back to the third range boundary, which means anytime I've got a resistance tested, I'm going to short sell with a stop loss at the market top. Of course, this time this comes with a stop loss, which means if I am wrong once again with Apple's timing, I'm going to take a stop loss. I'm not going to let myself ride over the all-time highs with a short selling position. So right now I'm still speculative exposed, and I'm going to start reinforcing if I get signals, of course, but this is the area I care about. And of course, if we ever retrace down to the second range boundary, oh man, I'm going to be heavily bearish out there. If we break this level, I'm not saying I'm going to short sell 110. I'm saying that if we break down 110, this is going to be a piece of shit for whoever bought that thing, because lots of deteriorations could show up. In the meantime, kind of patience. I still bought myself into Virgin Galactic because that's the level I wanted. Remember my first entry was, okay, please load me some history. Okay, so first entry at 9, second at 18, and I'm liking to multiply and use these multipliers. So yesterday I got myself into buying 36. Actually, it wasn't yesterday, it was the day before. So I got into Virgin Galactic. So kind of buying by multiples of 2, 9, 18, 36. And I expect a bullish reactivation, not necessarily a V-shape immediate reactivation, but kind of a digesting structure and reactivating later. So yeah, support on Virgin Galactic. Still the mixed feeling I have. Remember, I'm buying some stuff, I'm selling indices in the same time because I think the market on the overall pace is still pretty fairly neutral. When it comes to cryptocurrency, I'll go real fast. We're looking for the third range boundaries and we're probably going to get them sooner rather than later. Look for this H1 time frame reference, third range boundary, though this trend channel. Okay, we're probably going to get there sooner. This is where we're going to get our risk limitation signals. So bear in mind that doesn't mean short selling out there like an asshole. It's more like look at the signals we get, because this is where smart money is going to make the decision. Either we're going to extend the range in here, which means they want to price in the below 40K level, and this is the price I'll be willing to buy speculatively. Otherwise, simply in here they risk manage. Okay, they test the trend channel and then we break up and we squeeze and we break the third range boundary. In that perspective, remember that the 62K level is going to be the 1-to-1 target for a reverse. Okay, though don't try to buy this breakout because it's probably going to lead to divergence, though it's very risky. But that means, of course, if you want to take up this momentum and profit from the bull cycle in the general crypto sector, take the altcoins. Okay, that's the things we've talked about into the weekly updates, so I'm not going further than that. All right, all we can see right now is that anytime the market tries to go bearish, it builds another support. So it is bullish, and it's all the necessary ingredients I want to figure out that the probabilities for this third range boundary to react bearish are pretty significantly low. Okay, so I suspect that we have all of the reasonable probabilities to get to break this third range boundary, so don't try to short sell it unless you got clear evidence signals that I was wrong. Okay, bye guys.